Ho, 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 ho. What is the news we have for you? This is the Issues Watch podcast. Hello, welcome to the Issues Watch podcast. I'm Brad Muniz, your host for the bi-weekly accounting and auditing episodes. I'm a partner in charge of accounting and auditing at Sobel & Company. These A&A episodes now qualify for nano credits. If you're interested in earning CPE credits for this and other episodes, hit the pause button now and head over to njcpa.org/nano to find out how. A quick disclaimer, the views and statements expressed herein are my own and not necessarily those of NJCPA or Sobel & Company. So, what's happened over the past couple of weeks has not been an enormous amount of activity, although I tried to open up with that, but there hasn't been an enormous amount, which is good for December. The FASB came out with accounting for troubled debt restructuring exposure draft. If you have creditors that are in troubled debt restructuring, they have certain accounting that they're proposing. You don't have to adopt that if you've adopted CECL, the credit losses guidance that came out years ago. What's happening with the credit loss guidance, I don't know, to be honest with you. I know some public companies have put it into effect and maybe some private companies. You know that the FASB delayed it even further, one more year than the leases came out. Good thing. I'm hoping that the Private Company Council comes out, or FASB hopefully says private companies don't have to do this, because I sat through a session on CECL at a seminar that I was at, and it is extremely comprehensive, and I think it's going to be very difficult for the private companies to try and adopt that. If you have not attended any sessions on CECL, I strongly recommend that you look into this, because you don't want to be helping either your clients or your company trying to adopt this at the last minute. If leases is not bad enough, revenue recognition wasn't bad enough, CECL's just going to, boom, knock you out and say, I'm done with accounting. I'd rather do something easier like, I don't know, brain surgery or rocket science. I don't know. The Federal Accounting Standards Advisory Board, FASAB, came out with interpretation number 11 on debt cancellation. It's an interpretation. If you're involved in this area, I strongly recommend that you look into that. So, the big question is, where's Waldo been? Where has Frank been? I miss Frank. I saw him at the society meeting last week. It was great seeing him. But I read something the other day, and I understand why. Frank deals a lot with SPACs, and we're going to get like a where's Frank thing going to try and get him on one of these episodes, or more of one of these episodes. But he deals with SPACs, and the SPACs have been Special Purpose Acquisition Corporation or company have been dealing a lot with restatements, special accounting issues, which we all thought the SPACs were very easy, and then all of a sudden the FASB came out and said all these warrants that you've issued have to be valued every quarter. So what they thought was an easy vehicle to do accounting for, now every quarter became very difficult, and they had to go back and restate information. Couple that with the fact that I've read the statistics that in October, just 57 SPACs were listed, and that put it over 500 from January through October of SPAC. So if you're wondering where Frank is, Frank, we all miss you, and this is what he's dealing with amongst other people in the profession and people that work that are operating those SPACs. ACPA in their area came out with a guide a while ago on digital assets. I strongly recommend that you get a copy of that guide. The FASB really hasn't put out anything on that in particular, but the AICPA put out a guide for accounting and auditing for digital assets. And why am I bringing this up? I know I brought it up previously, but I was attending the NPO conference for the society put on, and somebody from the FASB spoke at it, and he particularly talked about digital assets and said that they are deemed an other asset. They're not an investment. They're not a financial instrument, because a financial instrument in and of itself indicates that you will get or have to pay cash. And a digital asset, if you're just owning the digital asset, not that it's sitting in your Fidelity account somewhere, if you're owning the digital asset itself, is not a pure indicator that you will get or ultimately have to pay cash. So it does not make it a financial instrument, but just a simple other asset. So if you remember, except if you adopt ASC 825, you don't change the value of other assets unless it's impaired. And if you impair it, you can't recover that. So that's the difficulty I'm having with digital assets and being other assets. Be very careful with this. The CAQ, the Center for Audit Quality, put out a study on cybersecurity disclosures. And just briefly, they noted that 34% of S&P 500 companies disclose cybersecurity issues as part of their filings. And that's up from 28%, that was in 2021, and that's up from 28% in 2020. So there has been an increase. So those that are in industry and those that are working at private companies, public companies, you want to start looking over your disclosures. The SEC is very, very big on enhanced disclosures. They want as much disclosure as possible. If you remember, years ago, there's a big move before convergence to go to IFRS. Everybody's like, IFRS is easier. But what nobody ever realized was that the amount of disclosure on IFRS was so much more than there was in GAAP. I mean, this anecdotally, somebody had said that they took a GAAP financial, which was 25 pages, and compared it to an IFRS financial statement, where the accounting was easier, but it was now 40-something pages because of all the disclosures and the principle instead of rules type of disclosure. So moving into other areas, the Department of Labor, not really the Department of Labor, but the New Jersey Society did an initial presentation of the DOL's review, or anticipated DOL's review of the 2020 Employee Benefit Plan audits. And we had a special guest, Michael Auerbach from the DOL, agreed to come on, and he did a great presentation, talked about gave us great information. The selection of the engagements, didn't tell us what engagement is going to be selected, didn't tell us exactly how they're going to be selected, but gave us conceptually. They're doing a first tranche of them, finding out what the statistics are, and then doing a second tranche of them. The SEC adopted some rules for issuers whose orders aren't PCOB inspected. Gives a lot more, some international stuff. So if you find yourself in that area, if you are with a registrant, you might want to look into some of the guidance that they put out about that. And in other area, COPS 26 sounds like a really bad show, but actually COPS, which is Conference of the Parties, and 26, because this is the 26th year that they're having it. COPS 26 is a UN Conference of the Parties on Global Climate Summit. What's important is, yes, they do talk about a lot of global and environmental issues. That's very important. But what the AICPA and SEMA had some influence on it, and I recommend that you look into that session that came out, because there might ultimately be some impact on businesses. Auditors and also get affected, but those CFOs, finance executives, it could potentially impact what happens with the companies. And lastly, and it sounds like a weird area, accounting for income taxes. Okay, ASU 2019-12 is effective for calendar year companies 2021. And if you have certain things like intra-period tax allocations, ownership changes in foreign investments, step-up basis and goodwill, and there's some other areas, you might be affected. So if you have certain income tax disclosures, I think it's ASC 740, you might want to start looking into ASU 2019-12, because you don't want to have this slip, because some knucklehead peer reviewer is going to come in and ask about it. Lastly, I read a good article in the Tax Insider. I know, me reading the Tax Insider, discussing naked credits. And in there, it talks about deferred tax assets and deferred tax... Excuse me?
Hey, Brad.
Oh, Nicole, what are you doing here? I wasn't doing anything that you shouldn't know about.
I heard you talking about taxes.
No, not me talking about taxes.
Yes, you. I heard. It's like a trigger word. I hear it, and it's just like, whoop, I'm here.
Like a genie.
Yeah, I heard taxes, and I'm really, really excited because I'm going to be hosting the tax podcast episodes. Yeah. It's okay. It's going to be okay. Don't worry. We're going to be talking about tax planning for year end and all this other great stuff. So
I know it's going to be good, but I'm not going to be the technical guy now.
You'll still be the A&A technical guy. I'll just be the tax technical gal.
Okay, I'll share with you. Okay. Thank you.
It'll be fun.
Thank you. Great presenter. You want to do the closing with me?
Sure, why not?
Okay. In closing, I'd like to highlight a couple of upcoming NJCPA events you might be interested in. On December 17th, there's a 3-credit program on remote auditing best practices. The program will also be replayed for CPE on December 22nd. And a complete guide to Yellow Book will take place on December 21st and December 30th. Go to njcpa.org/events for more information on these and other events. And as always, I recommend that you join the NJCPA Accounting and Auditing Standards Interest Group.
And the federal taxation or state taxation interest groups by going to njcpa.org/groups.
Is she going to keep interrupting like this? Oh, boy. Thanks for joining us. We're taking a short break for the holidays. We will be back for new A&A episodes on January 11th. You can access all Issues Watch podcast episodes, including Nicole's episodes, at njcpa.org/podcast. I want to wish everybody a happy holiday, and please watch for Nicole's upcoming podcasts. They're going to be great. Thank you.